Great to be here. Thanks for joining my show. My name's Gary Fowler. I am the CEO, president, and co-founder of GSD Get Shit Done Venture Studios, a premier AI and quantum venture studio located in Santa Clara, California. I'm a 7-time serial entrepreneur with 2 unicorns under my belt. I was on the original management team at Click Software, sold to Salesforce for $1.35 billion, and also Yva.ai. Great to have you here again. I've got an exciting, incredible show with an action-packed guest. Stephen Ogunro is my guest from Crosswork. We've met each other a couple of times, and just incredible background. He's an investment banker. He's done mergers, acquisition. I mean, really around the board. CBS Money Watch is just on and on. He's actually got an incredible CV. So London School of Economics, here we are, and it's great to have you on board, Steve. So bring him on. Steve, good to see you.
Gary, that's a great introduction. You know, it's what's amazing is I think our paths have sort of crossed paths over the years. You know, you did Click Software. You know, I was an investment banker. Covering field services at the time. You know, I talked with the guys at Click Software. I did quite a few interesting things in that space. You know, and then we've been on a few of these kind of shows together, right? So I'm glad that we're finally talking. And who better to talk to than the head of a company called Get Shit Done? You know,
what can I say? It's not like you made it up. You know, everybody talks about it, Steve, but the point is it's about execution, and also, you know, as you know, intellectual capacity is evenly distributed around the world, but opportunities aren't, and our goal is really to bring those out. So it's with great honor, and I'm humbled to have you on the show today. So tell me what it's like. So you're originally from Scotland, right? Nigerian descent. You went to London School of Economics. So what's the journey like? And then you became an entrepreneur. I mean, you've done so many things, you know, you got a wide background from an advisor's merger and acquisition, working with the Japanese, working with General Dynamics, you know, selling companies, chairman of the board of companies, IBM board, member consultation on IT security. I mean, just a really wide background. So, okay, how do you have such a wide background?
It's a journey.
Well, obviously, you're on the right pony because something's moving in the right direction. It's incredible. So,
you know, sometimes it's a Dante's Inferno's journey. You know, but it's, you know, I'm very lucky. You know, I'm very thankful. I think that obviously I have a very diverse background in many ways. You know, as you pointed out, I started off life in Scotland. You know, just imagine me, a little kid with a Scottish accent, right? You know, and then great family. You know, the dad's a doctor. You know, mother is very religious, right? You know, so very, you know, we traveled quite a bit. You know, lived in different countries. You know, and it just made me want to continue, right? So, you know, I developed an interest in investment banking. You know, quite by accident, to be frank. You know, I didn't start off life with any sort of high aspirations. I just wanted sort of a very sort of simple, middle class, lower middle class life. In fact, in the
wait a minute, Steve. Wait a minute.
Yeah,
like the country boy thing. You went to London School of Economics for your bachelor's and master's degree, and I just wanted to have a normal life. Hello there. What's wrong with this picture?
I can't help it. I'm competitive.
And you know, you were a professional tennis player and whatever. Okay, I got it. So,
yeah. So I developed a love for investment banking. You know, I read all the popular books at the time. It's very competitive in London. So this is going back to sort of the early to mid 90s, right? It was a very competitive time in London to want to be in investment banking. The big American banks, the Goldmans and the Morgan Stanleys, they'd accomplished a bit of a foothold, in Europe, just given that kind of global advantage of power, but they still weren't fully entrenched, right? So, and everyone wanted to work for them, right? So I was fortunate in that, Morgan Stanley hired me initially, and then Goldman Sachs hired me after that, and the rest is history, as they say.
Well, I mean, it's incredible. Morgan Stanley, Goldman Sachs, Cluj. What is that? I mean, it's I don't know. It's Cluj affiliate. What it said? Private equity and M&A. What exactly? Who's that?
Yeah. So one of my partners here now, he worked full on for John Kluge. So John Kluge was the wealth was one of the wealthiest, if not the wealthiest man in America, right?
Yeah. No, I remember the name, but but was that in London or was that in the U.S.?
It was in New York,
I got it.
He invested in the group, we did some things together, and yeah.
So when did you move from the UK over? Was that with Goldman Sachs, Morgan, or when did that happen?
No, well, so I did a stint with Goldman in New York, went back to London, and then, but I love New York, and I wanted to come back. Right? So,
sounds like a song, Steve. I love New York.
I was single at the time. I had a friend. You know how that goes. Right? So,
I know.
So but I knew that to do what I do, I needed to spend time in New York, right?
Mm-hmm.
So I jumped on a plane, came to New York, a group, found a group that I liked, very sort of entrepreneurial finance. There was a KKR partner, the former head of investment banking at Citibank, former head of investment banking, Payne Weber, head of Merrill. They banded together and said, hey, we're putting a group together, and what we're going to do is we're going to buy companies, we're going to merge them together, take them public. Are you interested? I said, I'm in. And the I was in my 20s. Mid 20s. So I said, yeah, I'm in. So moved to New York. Worked the deal life in New York, and one thing led to another.
Now, are you in New York now, or are you in LA? Because I'm
in LA now.
I got it. Okay.
Yeah. I've lived in different places since New York, but I like the sun. So I live in LA these days.
So what about Install It, right? So Install It was acquired by Service Power. How did that happen? What was that like? You were at Cluj and you decided, well, to do this, or was that a separate trend? How did that happen? How did you get involved with that?
So now at this point, so Cluj affiliates, a company that Cluj invested in, not Cluj.
Yeah.
So what happened was, I was living at that point in time. I was in Minneapolis for a little while, right? And I was focused on the field services space at that point. Tech-enabled services, primed for growth, et cetera, right? And I met this really interesting young CEO who had built a business, but had made a couple of key mistakes.
Mm-hmm.
And my first instinct was like, I want to help this guy. You meet people in banking where where it's not all about it's not all about how successful necessarily this current venture will be. Sometimes it's just about the person. Like, this is a good person that you like, and so my initial instinct was to help, but he was pretty adamant that he sort of wanted out. So I put a deal together. where acquired sort of a controlling interest in its technology. I knew the space really well, so I knew that sooner or later someone's going to want this. And literally within a week, someone was knocking at my door. I want this, and so we said, okay, here's what we'll sell you a significant stake. We're just finance guys. We're not operators. You go operate these assets, etc. And then so this guy he came in, bought the assets, put a team together. I was co-chairman at the build it up to a decent size. It was a little bit too. It was just a touch ahead of its time. But then Service Power, UK public company, approached us about acquiring it, and we agreed and sold it.
That's great. That's a great. That's a.
Go ahead, Gary.
That's a great story.
Yeah.
And we talk about. I want to talk about SPACs, the pros and cons of SPACs, Steve. So we hear about SPACs, all day long. I mean, they seem like incredible vehicles with the right kind of team, the right kind of technology. What are the pros and cons of SPACs today? And what do you see is going to happen over the next year and a half?
So SPACs, a SPAC it's just another way to go public, right? I mean, that's kind of the short version of it, right? So when you think of pros and cons of SPACs, first of all, think of what are the pros and cons of public companies, right? So the pros are, you have some liquidity, cash in your balance sheet, hopefully a lot of cash in your balance sheet. You now have acquisition currency, you have sort of a means of incentivizing your employees, etc., credibility with customers, so all of the traditional benefits of being public, right? And then, so what are the disadvantages of being public? It's just that the headache of dealing with institutional retail investors, investors up your ass.
Yeah.
Say that or not? Your stock price fluctuations, all the regulatory issues, the expense of being public. Having to change your mindset a little bit from long term to quarterly. So these are all traditional disadvantages of being public, right? Now with SPACs, there's an additional layer on top of that, and it comes down to a few things, right? So the structure of the SPAC really important, really critical. Unfortunately, there are a lot of bad SPACs out there. There are good ones too, but there are quite a lot of bad SPACs, and we'll see that over time. And in fact, you're starting to see a lot of litigation now in the SPAC space, right? So in the Delaware courts and the New York courts, we're seeing litigation around disclosure. So the disclosure of, hey, I don't agree with this. I don't agree with this company that you just acquired. Let me sort of backtrack a little bit. For those that don't really know what a SPAC is, right? So SPAC is a special purpose acquisition company. All that it really is sometimes called a blank check company. It's a company that goes public with no operating sort of business. It's basically an acquisition company. The company typically has about 2 years to complete an IPO or the money returned to the initial investors. Initial investors might be hedge funds, a few other people that are sort of interested in SPACs, etc. But so that's what a SPAC is. So you put the SPAC together. How do you draw investors into it? You give them a sweet deal, and that sweet deal is typically a combination of shares and warrants, right? So what you'll find with the ones that aren't really good is that there's way too much warrant overhang, right? Now this is, everything that I say is general, and there are exceptions, right? Also, I should say, I'm not giving financial advice. This is,
We need a disclaimer out there. We're not giving financial advice, people.
Get yourself a lawyer. get yourself accountants, finance pros, etc., to advise you. This is not financial advice, right? So, when you have too much, it's called warrant overhang. Too many outstanding warrants as a percentage of your overall capitalization, it puts downward pressure in your stock price, right? It's very painful. A lot of large institutional investors will not invest with you, either strategically or they're actually not allowed to. It's just very painful. So a lot of SPACs have done that bad move. Now we're seeing sort of smart acquisitions where the acquisition is so big, that overhang just goes away, right? And then there's a financing, there's a financing time with the closing of the acquisition. Those things work as well, right? So I'll tell you one that I have my fingers crossed for is Grab. The Singaporean company, right? That may be the biggest SPAC of all time. If I don't quote me on this, but I think it's about a $40 billion potential SPAC.
40 billion?
40 billion, and with a lovely juicy pipe from BlackRock, so a pipe.
Make it sound like a T-bone steak, Steve. I'm so hungry.
This is like porn.
It's lunchtime. No, that's great, man. You know how to describe. You turn words into pictures. Keep going. What about the vegetables? I'm all ears now.
So what a pipe is a private investment in a public company. So it's an invested company that says they're going to write you a big juicy check with a lot of cash, right? So very important for a lot of SPACs because it's tough for a lot of SPACs to go back to the capital markets because of or at least in the near term, just because of the complexity of the offering and the fact that they really have to kind of show success, to attract a broader group of investors, right? And that often takes a little bit of time, But I have my fingers crossed for Grab. The SPACs as a tool would be absolutely phenomenal. It would be evidence of the evolution, of our capital markets. The ability to go public quickly, the ability for public investors to share in some of the growth and benefits of venture opportunities would be just phenomenal. It would be excellent, right? So I hope that it's successful, and I hope that that people pay attention to structuring SPACs properly so they don't screw things up for the rest of us, right? I think this already, but I published a paper, on things to consider when investing in SPACs and also issuing SPACs, right? But also not just the cons, the things to be concerned about, but solutions as well. So if you've made mistakes, how to the extent that you can, how to address and correct them, so that we're all happy.
No, I got it. And when you look at a SPAC, so it's a public company without any company inside of it. How important is the management team, the team of the folks that are, part of that?
Yeah, absolutely critical. You really need. There has to be so much trust. And then the investors want to know that, look, you have a track record of doing this, or you have such an enormous strategic position, that you can find that's worthwhile. You can find a company, that will scale significantly, right? So the trust factor is very important. So if you look at some of the most active guys, you have Gore's Group, the CEO, that they're very active, but they've been doing successful acquisitions for a long time, right? And you have Social Capital, again, you're talking about people that are kind of really well positioned in the deal space. So having credibility as an acquirer that can go and position yourself with the most attractive companies that will that will deliver you quote unquote exponential growth, and everyone's going to be happy, etc. You as an investor, you need a strong acquisition team.
Oh, that's great. And so, strong acquisition. What areas, if you look at what type of technologies, let's talk about tech companies. What kind of companies are interesting from a SPAC, from your perspective, Steve? What kind of companies would you say, listen, these are some of the technologies that would be interesting? What do you see if you say the top three? What's interesting today? That's maybe not tapped, but could be tapped.
Yeah, I'm going to answer the question slightly facetiously. The top one, number one, growth. Number two, growth. Number three, growth. Right. So basically, it comes down to growth. My advice is, and this is sort of a hard balance: growth and cash flow. That's what my advice is. If there's some strategic rationale for going public, but you generate a lot of cash flow, and those, not very common, but if you do that, and of course the SPAC structured properly, et cetera, you're good. Another thing is this. Now, if you think about how a SPAC is formed, typically you're not having, like a global IPO, like a Saudi Aramco, like global roadshow, roadshows in New York, Amsterdam, London, Tokyo. That's not a SPAC, right? With a SPAC, you're going to a smaller group of investors, who have this sort of strategic interest, right? But when you're public, it's much better as a public company to have broad, wide distribution, so that your shares are fungible to some extent, with cash, right? You perfect information, perfect market liquidity, etc. You need a large shareholder base, So what that means is that if as a SPAC you can find a name like Virgin Galactic, everyone knows who Virgin is, right? You have. There's, that's a good thing. That's not a bad thing at all, right? So Grab, well known to your sort of marketplace, sort of your style investors, obviously known all over Asia, so you'll have the interest of both Asian investors and US investors as well, right? So popularity is not a bad thing at all when it comes to the SPAC business, to help you build out your shareholder base, because you will, to have a strong share price.
Got it. So name brand recognition, that helps.
Very helpful. Many companies, I just say many companies don't have it, but if you do have it, that helps a lot.
No, that's great. That's great advice. I know when we did Click Software, the original name of the company was called IET, Intelligent Electronics, and I came up with the name of Click Service and then Click Software. And it was amazing how that changed things. That simple change. People said, "Oh, I've heard of Click Software. It's impossible." they heard of software, but and then we came up with the family of product: Click Flick, Click Fix, Click Plan, Click Analyze, Click Schedule. I mean, this is like keep it simple, stupid. I'm a farm boy from the top of the mountains in Pennsylvania. It's like, black and white and has horns. It's probably a cow, right? It's that they can do this. But yeah, you're right. And with the digital transformation upon us, having that visibility and credibility on the internet so people can read about some of the things, because you can't, as you said, it's really tough to travel, to go to Glasgow, to go to London, to go to Beijing or Hong Kong, to be able today with the restrictions with COVID, it's not so easy. So it's really important. I agree with you 100%. And visibility is key. So what do you think in terms of, so, and having gone through an IPO on Nasdaq with Click Software, it is not easy. I mean, when we did that, it was not easy.
Yeah, yeah.
At the same time, SPAC's like a little bit shorter, and quite frankly, you get some of the same kind of benefits. It's really interesting to be able to do those things in a really shorter period of time. What do you think is going to happen a year and a half, 2 years from now? What's your projection in terms of SPACs and the environment? Let's assume that everything's right, that we have some good quality SPACs coming out. What does it look like? Are we going to do more of them in 2 years? Is it going to slow down? What do you think?
I think we're going to get to the point where it stabilizes. I think we're going to get to the point where it stabilizes and then just takes off and grows. Right. We're in. I view this, and some will disagree, but I view this as sort of the secondish wave of SPACs, right? Which means that the first wave had, you had a lot of pig and a little lipstick, right?
Yeah.
Yeah.
Man, I'll tell you, those words and pictures.
Yeah.
I grew up on a farm. I understand what you're saying.
Yeah.
Lipstick makes a lot of sense to me. All right, let's go. That's great.
So now we're in this current wave where there's been improvement, without a doubt. There's been improvement, which is why we've seen kind of the volume take off.
Mm-hmm.
What we're going to see now is we're going to see the litigation, right?
Mm-hmm.
We're going to see all the we're going to see New York and Delaware are going to be filled with litigation. Oh, you never disclosed this to me about the acquisition target. Oh, you never disclosed this to me about the shares and the options and the units. Oh, you never disclosed to me properly that this other shareholder who you told me was in owns a completely different class of securities from me. Why is he doing well and I'm getting shafted, right?
Yeah.
So
I was reading your list there for a second. I agree. It's going to be, and it's really important. Whenever you have a new market like this, that, and again, it's been done for a long time, these blank check companies, but really you need to have an experienced team in order to put it together that's been down this road before and understands how to do it and understands how to do it the right way. Because if you don't do it the right way, there's always, even with an IPO, right? There's a traditional IPO, there's always challenges. So, having those in place, it's, I've seen it. Whenever you have a new market, you have, there's kind of like cowboy times, and then everything starts to settle back into the rules and regulations.
Exactly. So I think once there's sort of a body, once there's a body of case law out there that your SPAC attorneys can refer to, then we'll start seeing sort of more stabilized structure. And once you have that stabilized structure, you'll have scale, right? So we've just got to flush things out a little bit. A lot of trial, a lot of litigation attorneys, they're going to get very wealthy as well. But once we get through that, then we'll have stable product, and it'll be to everyone's benefit.
No, it's great. Steve, we're coming up to the top of the hour, and I just want to say I really appreciate your time. So closing thoughts in terms of where we are. We see a lot of crypto activity right now. Coinbase yesterday. Yeah. We see, Bitcoin, I don't know what it is now, but it's 62, 63, 64. Ethereum's up. So, looking over the next 6 months, what do you see in terms of, the appetite, the public appetite for companies and, tech companies in general growing over that period of time? What's your vision of what's going to happen?
Well, that appetite's only going to go up, right? I think that the SEC has done a good job, in the last, over the last decade, in terms of relaxing regulations a little bit, letting people breathe a little bit, and letting relatively unsophisticated investors access opportunities, still with some big brother supervision, but that's helping a lot, right? And what's also helping is this sort of decentralization of capital markets. I think things like Bitcoin, Ethereum, the crypto has allowed people to go out and take risks without having Big Brother over their shoulders, right? And you're seeing this sort of secondary, tertiary development on top of that layer. So we're now seeing what's happening in the NFT space, right?
Mm-hmm.
These non-fungible tokens.
Mm-hmm.
These are sort of built on blockchain. Similar in some respects to cryptocurrency. That market's taking off.
Mm-hmm.
So additional markets will take off. Over in the crypto space, but obviously also in many other segments too. AI, we're really excited about. Know that you're one of the kind of the leading figures in the world of AI, Gary.
I don't know if I'm the leading figure, but
you're one of them.
I can't nearly pay
that market needs
you. Like you. I appreciate it. I'm humbled. Anyhow, Steve, I'm humbled.
But we're seeing one of the things that we're really excited about in that world is GPT-3. So OpenAI's implementation, right, of the world's largest kind of machine learning platform, built using autoregressive natural language processing. So I'm trying to sound smart,
Great job. I'm listening.
But what they've done with that is really magical. We will see AI will change technology and change your ability to compete in technology. So the same way that the internet. So this is my prediction. So the internet changed the brick and mortar world for good. It decimated many companies. Remember how when you wanted to buy a plane ticket, you'd walk into a travel agency. I beg you.
It's a week endeavor.
Yeah, exactly.
I don't know. I can't get out of it. We're really busy right now.
Yeah.
The ticket's like 3 times the cost, but I don't know. We can't get a better seat.
Yeah, exactly. So the internet changed the world.
Mm-hmm.
AI is going to do to internet companies that don't stay ahead of the curve what the internet did to brick and mortar. Right? Mm-hmm. It's pretty simple. I will not buy from you unless you're making me more intelligent than I am. You want me to buy your marketing software? Do all the intelligence work for me, then I'll buy your software.
Mm-hmm.
Want me to buy your computer? Do some intelligence work for me, then I'll buy your computer. Mm-hmm. The competitive advantage scope is so broad and mm-hmm. so powerful that if as any company you haven't fully embraced AI and machine learning and data science, you're a dinosaur. You're a walking dinosaur.
No, I agree. And we talk about I wrote a paper on GPT-3 a few months ago, but I really what I see is really going from smart to intelligent assistant. Think about it, Steve. The amount of data that you and I in the world today is about 40 zettabytes. If you took CDs and stacked them one on top of another, it would go 29 times between the Earth and the Moon, growing around 68% per year. So we're in a state, as Toffler said, infobesity. Right, we are truly inundated. And think about it here. Really smart guy, London School of Economics. But I've talked to PhDs from Stanford and Harvard and Princeton. Same challenge. How many times every week does somebody say to you, "I sent you a message. Did you get it? Where did you send it?" Well, I sent it 3 days ago, and I sent it to your Gmail account. Yeah. You said, "Can you send it again? I can't find it." How many times does it happen?
Yeah.
Right? And think about it, in your own personal cloud, and my part with this, there are about 300,000 items. The entire web in 1996 was 257,000 websites. Your personal cloud has more than the entire number of webs in 96 and is doubling every year. In 5 years, it'll be 10 million. How in the world are you going to be able to find things? So unless we have intelligent assistants, not smart, but intelligent assistants, kind of like a guardian angel, right? To be able to curate the data around you to make sense of it, we're going to be, as you said, dinosaurs. So it's critically important. And the other thing, Steve, we spend a lot of time going around the world looking at companies. We really need to democratize opportunities for folks because we need to spread it out. The Zoom has done a great job of being able to have access, but we got to do it more. More people have jobs. More companies are being built in all kinds of places: Nigeria, South Africa, Zambia, Ghana, Kenya, all over the world. Russia, Ukraine, Belarus, wherever there are opportunities, and we need to work together to make this world a little bit better place. And I got to say thank you. How can people reach you? So what's the best way to get a hold of you? LinkedIn, Twitter?
So the best way to reach me is, I'm gonna give away my age, is via email. Okay. And then no one's, everyone's sort of using all these third-party apps. I'm old. I use email.
We're gonna have like a beeper.
Yeah. Email will be like
the old-fashioned way.
So it's at crosswork.us. So pretty simple. Steve O at crosswork.us. Steve in the letter O at crosswork, CROSSWORK.us. That's the best way to reach me.
That's great. Steve, I want to say thank you for taking time out of your busy schedule to be able to come on my show today. I want to thank my buddy for joining us today. We'll get back again next Tuesday for another edition of GSD Presents Silicon Valley AI and Tech. Have a great day. Stay safe, stay happy, and go get them. Thank you very much. Thank you, and talk to you soon, Steve.
Cheers, Gary.